Good morning. Welcome to the Fractal Effects live stream. Please make sure you read the disclaimer. If you're following along with us, make sure you do in a demo account, as this is for educational purposes only. This is not financial advice, and we are not financial advisors. Please check us out on fractaleffects.com, where we teach algorithmic trading. Now let's jump onto the charts. So today is FOMC. So we'll be paying attention to oil here on the left. We also have crude oil inventories coming out right now. So let's see how that pushes the market. We do not yet have a confirmation. We are looking at NAS on the right here, just to keep an eye on it. Anybody who does wish to trade the indices, a better time to do it is in the afternoon session. I believe the last FOMC news to drop is 2:30. Always wait for FOMC to be over. That's why we have such a tight consolidated range here in the morning. But we have taken out London lows. Today we got a bit of a contraction model happening. Usually when that happens, the market takes out both sides, which it did at open. Took out the highs, took out the lows, even though the range was not that big. Again, just keeping an eye on it. Not the kind of day you want to be trading the indices. We're close to getting a confirmation here, watching US oil on the left. So with oil, we had originally a downside expansion model. Asia session, bearish confirmation, retracement, extension. London session, bearish confirmation. Not much of a retracement. That's because you had a retracement earlier before confirmation, full extension, and now we are getting a bullish confirmation. 1 minute 32 seconds left. Let's see if it sticks. That's London's fair value gap that it bounced off of. So we also had a bit of a early retracement down to London. We have the 20 EMA running right under us. About 25 seconds left. So this is Tuesday's range marked out by the aqua line. Okay, so we have our bullish confirmation, and we might not get that big of a retracement since we've already retraced back down to the 20. But we have left a pretty big gap. Let's see how much of this gap fills on this next candle. Again, make sure you're looking at the right ticker. We're looking at US oil on the left. That might be a different ticker depending on what broker you're with. Maybe they only trade Brent crude or West Texas Instruments, depending on your broker. Make sure you're looking at the right ticker and the right chart. We're getting some bounce off of Tuesday's range, that aqua line. Also the top of our dealing range. Three minutes, 48 seconds. I want to see this candle close. I want to see how big this gap is. And we can start setting up possible entry. Remember, the strategy works on any asset that you want to trade. We could even take a look at try to see if we could take a look at one of these forex pairs, or the foreign pairs here, or the exotic pairs they call them. Let's take a look at Aussie New Zealand. I haven't looked at this pair in a while, so it might just be some random stuff on our charts. Got 1 minute 57 seconds left for this candle close. So we have a downside expansion model here on Aussie New Zealand. Bearish confirmation, retracement, extension. London session, we had a bearish confirmation, retracement, and then it kept going, but we did not break the range. We finally got that extension late. So this would have been most likely a loss if somebody had entered here, and then probably wouldn't have got in for a second entry. And now for New York session, got the London fair value gap above us, 20 EMA. So since we have a downside expansion model, it might tap the 238 push down, but no confirmation yet. We got 42 seconds left. We're bouncing off London's fair value gap, bouncing off Tuesday's range, and the top of the dealing range. But again, I want to see this fair value gap form. I want to see the 20 EMA cross into it. And then we can start looking for something. 17 seconds. Let's see how big this gap is. Okay, left a pretty decent sized gap. Now I want to see the next candle trade into the midpoint, consequence encroachment, while the 20 meets us. Actually, sorry, that's Asia's gap at the top that we bounced off of. This is London's down here. So we got London below us, and we got Asia's fair value gap right where the price is. Now again, it could take off from here, since we did get an early retracement. And there are a lot of points of confluence here. Could just tap this fair value gap and take off, which is fine. Again, we want to see it hit the midpoint. That's when our probabilities increase. We want to see it hit the 20 EMA. That's when the probabilities increase. Remember, day trading is not everyday trading. If the conditions are not right, you do not enter. If it leaves without us, that's fine. As mentioned before, sometimes the best trades are the ones you don't get into. Especially on a day like today. Not only is it FOMC, it's crude oil inventories. That's where this big candle came from. Dropped right at 10:30. Let's see if we can't get this retracement before 11 o'clock. I'm just watching one of the foreign pairs here. Australian dollar against the New Zealand dollar. No confirmation as of yet. Downside expansion model. We have some divergence going on here on the TDI. Pushing down. One minute, 51 seconds. I want to see if we cross into this fair value gap. 20 EMA slowly coming into the fair value gap now. Let's see if it hits that 20, if we get some kind of a reaction here. We're watching whatever asset you're looking at, you want to make sure you're looking at it on multiple time frames. 1 minute, 5 minute, 15 minute. There's only so many screens we can share with you. But as soon as we have contact, now we start looking at it on these multi-time frames. Now I want to see a push up on a smaller time frame. I want to see fair value gaps forming. Remember, the full strategy is in the Learning Hub on the back end of Fractal Effects. Make sure you watch all the videos to familiarize yourself. during these live sessions, there's only so much we can go over. So on the smaller time frame, about 36 seconds left for the 1 minute candle to close. I want to see if it forms any fair value gap, gives us any kind of entry. This is the kind of reaction we want to see, bouncing off the 20, bouncing off the consequence encroachment, but we don't jump in immediately again. There has to be a valid entry. So we have a fair value gap that is slowly forming. I want to see if it stays open. Fair value gap within a fair value gap. And again, if it takes off without us, that's fine too. We want to see a proper setup. This is how you prevent FOMO. About 24 seconds left. Let's see how much this gap stays open. Three, two, one. Now I want to see it touch middle here. And I want to see the next candle engulf it. And that would be a good long. But we also don't want to see it staying here too long. So we have hit the fair value gap. Doesn't necessarily have to hit the midpoint. Now I want to see if this next candle engulfs it from here. This could be a quick one. I'd like to see it come a little lower. Let's see if it does though, or if it just takes off. I'm interested here if it taps us in from 1 standard deviation. I want to see it hit the midpoint right there. That'd be a pretty decent entry. High probability. But again, it could take off from here. Right now, I don't feel comfortable setting a stop loss under there. That means the next stop loss would have to be under here, which is a little too low for me. So once this hits and rejects the midpoint, at least I feel comfortable putting a stop loss under that wick. But as mentioned before, we have tapped this fair value gap. We are bouncing off the 20 EMA on the lower time frame. There's the aqua. I would like to see it just hit that. Sometimes that's all it is. It's a difference of 1 or 2 pips, but sometimes it never taps you in. Yeah, right now I'm not confident with this low. That I want to see it kind of come back in, hit this 50, hit that midpoint. With our target being, again, 1 standard deviation. That's the play I'm looking for. Could take one more swipe, could even take out this low. That's why you want to see it come into this range more than just that tap. But it could also take off without us. Usually it likes to do one last swipe. For the people who did get in here and set their stop loss right below this. Maybe even take out this low. Now it's coming back to the fair value gap. Okay. Now I want to see if it spikes here. And this could be our entry. I want to see this candle close first. 5, 4, 3, 2. So now we're closing a little low on that fair value gap. So I want to see if this next one shoots up or if it just keeps driving down. Could keep driving down to take out this low. And then just wick and close within this fair value gap. Let's move this over. Still no entry yet. Remember, we want to see a reaction from this area. All we've done is entered the area. Still driving lower. I want to see this candle wick and close here inside this fair value gap. Then I'd be interested in entry. 18 seconds left. That's a 3.46 all the way to 1 standard deviation if we get this entry. So far we have not engulfed. But again, this is still a high probability. I just want to see if this candle, excuse me, wants to drive lower or if it closes above the wick. That could be a valid entry, actually. 25 seconds left. So that would be most likely, that's a high probability entry. We want to see this now start driving up. What we want to do is we want to make sure it doesn't come down, sweep this low. So the faster we get out of this fair value gap and the faster we take out these highs, the better. The more swipes it takes, the more our probabilities decrease. Just want to see where I'd like it to leave this fair value gap before we start messing with calculator here. And we could get some gesticulation, some consolidation here, because again, it is crude oil inventories, it is FOMC, all markets are affected. On Australian New Zealand dollar, we do have a bullish confirmation now. Remember, we don't want to stay in this area too long. Get some reaction now. Let's see if this sticks. Just want to see where 2R would be. So that's 2R. This is where you would move your stops to break even. Takes them off the table. Again, we still want to see that thing push out of that fair value gap as soon as possible. The more it gesticulates, the lower our probabilities become. And let's just go for 3. One standard deviation is right there, but again, today being crude oil inventories, let's play it safe. Remember to use a lot size calculator. Even in a demo account when you're practicing, you want to make sure you get your lots right. Again, if you're trading futures contract, you want to make sure that you know exactly how much you're going in for. You're risking 1% and you're trying to aim for 3%. Again, we do not want to stay here too long. On the 5 minute, we usually give it about 3 candles. So you don't want to be in a zone for longer than 15 minutes. Right now, we can count it as 1. As soon as we hit, that's 1, 2, 3, 4, 5. 1, 2. So we're technically on our second 5 minute candle. We want to see this thing drive. The longer it stays here, it could turn around, push down. Right now they're engineering new liquidity. There are people that are going in short off this fair value gap. They're looking at this as an intermediate term high. And then there are people going in long off this fair value gap and looking at this as an intermediate term low. We'd like to see this candle close outside this fair value gap. 5, 4, 3, 2, 1. Let's hope this next one drives up. We do not want to see it come back into the fair value gap. We want to see some movement happening, proper movement. Might see some resistance here. We're at the top of the dealing range. We want to see that continue to drive. As soon as we hit that green line, that's our 2R. We move our stops to break even, and we take some off the table. Remember, trading is also about money management. We've just taken out these highs. The quicker we take out these highs, the more the market will continuously push up towards one standard deviation. As mentioned before, we don't want to see too much gesticulation happening here. Two minutes past 11. For Australian New Zealand dollar, again, we have a bullish confirmation. We are seeing now a little bit of a retracement. There's a fair value gap in here. 20 EMA is slowly pushing up as well. So oil left this fair value gap open. I don't want to see this fair value gap traded back into. Hopefully we just get a push from here. I want to see a reaction. "16 seconds left." Let's just move this out of the way completely. 2, 1. So far we're trading this fair value gap, pushing down into this one now. Hitting the 20 EMA on the 1 minute. So the fact that we've already taken out this high, that makes this low a protected low. It should not need to trade back down here. So again, if it does, that's just manipulation. We should see some reaction happening from this zone, off this 20 EMA. Aussie New Zealand, again, we have our bullish confirmation. Still a lot of gesticulation at the top of the dealing range. The only valid fair value gap left is right here. Let's see if the 20 EMA meets us here. If we tap it and then we push up. Oil now slowly driving to the 50 EMA. Remember, the longer it gesticulates, or now we're back into this fair value gap. So the longer it gesticulates, the more we go into money management mode. I would actually move stop losses to break even once it takes out this high. Takes them off the table there, and immediately move to break even. Aussie New Zealand slowly heading towards that fair value gap. $20 EMA slowly coming up towards it. About 5 seconds, 4 seconds left. This candle close. Again, oil just engineering new liquidity. Now that they've set a new intermediate term high, there are people that are looking to go short from here, while there's still people in a long position from down here. So they're playing both sides. This is what we don't want to see. We want to see candles driving up. Where the market hates straight lines. Right now we have this entire area, wicking happening here. You want to drive up and past this point as quickly as possible. Aussie New Zealand still just bouncing at the top of the dealing range, bouncing off the 238. Now keep in mind, this is a downside expansion model. So even though we have a bullish confirmation, all the confluence has to be there in order for us to even think about going long. We bounced off London's fair value gap and pushed down. This could just be a false move and us push down. So again, you got to look at the entire narrative. This would be a counter trend, but we have to take a look at it on a higher time frame as well. Oil now slowly trying to get up there. We want to see it quickly take these tops and at least tap this. It's about 11:10 right now. Okay, we're officially in a safe trade. You should take some off the table there. Move your stop losses to break even. And I want to see it get up to 3R. As quickly as possible. We should be at that point by 11:30. But we've also taken these highs now. Usually when highs are taken, remember there's only two things that the market is doing. Seeking liquidity, or it's filling in inefficiencies. So we just took liquidity here. So it could now come back down and tap into one of these fair value gaps, which is an inefficiency. Volume imbalance, fair value gap. So it might take a couple of candles to get up here, but that's why we're giving it till like about 11:30. And one standard deviation. Hopefully we can see this candle just drive right through. Let's put a line there, it's actually easier to see. So that's 3R. With Aussie New Zealand, we are now at that fair value gap. We have the 20 EMA slowly coming in there. This is a counter trend trade. Let me take a look at it on a higher time frame. I'm just curious as to where this market is going. No, we're still primarily bullish. Let's drop back down to the 5-minute. Tuesday's range is above us. So we have tapped that fair value gap. That 20 EMA is slowly coming into that range. About 15 minutes left. Getting some rejection there. Haven't quite hit the 20 though. As mentioned before, if you're going counter trend, all the confluences have to be there. On oil, we're gesticulating here now. I want to see one more candle just drive up. We're at this fair value gap, as mentioned before. We're either seeking liquidity or filling in inefficiencies. Right now it's filling in this inefficiency. Let's see if it wants to go drop all the way down here. This is not what we want to see. not when we're that close to our TP. So if price comes back up here, I personally would even close off the trade. But that is our 3R. Let's hope this next candle just shoots right through. Otherwise, it could actually fill in this inefficiency, or this one's already filled in. It could fill in this inefficiency and tap this 20. Aussie New Zealand still pushing down further. Again, we've hit that fair value gap, but we have not hit that 20 EMA. So right now this is a breakaway gap on oil. We'd like to see price stay above this. Yeah, still not interested for Aussie New Zealand, not until that 20 is tapped. Oil now trying to get down to that 20. And sometimes you'll see this. You'll see it get so close to your TP and then just go back down to fill in an inefficiency. You just got to be confident in your position. That's why we roll our stops, right? That's why we take some off the table. So our stop is still down here. We've already taken a payday here, closed off a portion of our position. Now we're letting the rest ride to hit the TP. Remember, our primary focus is the strategy itself, algorithmic trading. As far as the small stuff like figuring out how to close off a small position, even trading view tools, you can find tutorials on YouTube. You can actually trade right off of TradingView if you prefer. Whichever broker you have, you can just hit trading panel down here, and you can link your broker right into TradingView and trade off of the charts. Some people find that easier. Otherwise, there's MetaTrader 4, MetaTrader 5. We can't really recommend a broker and or a platform. It's entirely up to you. You are going to need a TradingView, at the very least, a TradingView plan, basic one, just to link our indicator. Our indicator is currently exclusively on TradingView script, but it's only, I believe, anywhere from $12 to $14 a month for their basic plan. So we're getting a bounce at this fair value gap. About 10 minutes left in our stream. We will be concluding early, especially given the fact that it's FOMC. So we're getting some rejection here, but again, still not interested. We didn't hit that 20. We're not getting much of a bullish reaction. It's a bit of a counter trend, downside expansion model. So in the next 10 minutes, if we don't see a setup here, that's not worth taking. 20 EMA now close to the fair value gap. Could just tap this, push up, fill in a little bit of this fair value gap. Ideally, we'd like to see this stay open, and we'd like to see this drive up. This is where patience is required. As mentioned before, the closer you get to the TP on this next candle, it's worth just closing it off and being out of the market by 11:30 on FOMC day. You're already in a safe trade. Might as well capitalize. And once you've mastered this, then you can actually take your risk management to a whole nother level. You can even, as soon as you hit your TP, for example, you can even close off 80% of your position, 90% of your position, leave 20 or 10 of it rolling until you hit one standard deviation or whatever the Fractal Effects dashboard says is the standard deviation extension for today. It might say it's 1.2, 1.5, so you can set it for that. Because once you're in a safe trade and or you've already hit your TP, then the rest of it is just kind of letting it ride. So again, we came up here. I'd close it off even here. I'm sure I'll tap that now. But sometimes you see too much of this gesticulation, which can just get annoying. Eight minutes left in our stream. Aussie New Zealand finally at that 20 EMA. Still staying within that fair value gap. I want to see what happens here. Oil still gesticulating. Again, this is not what we want to see, especially when we're that close to our TP. So again, I would have closed it on this candle here when we took out this, or came up to this high. If you're still in it, again, the second you get closer to the TP here, you can, or even here. 7 minutes left. Our goal is to be in and out as quickly as possible. We don't want to see too much of this sloppy gesticulation. It could easily just drop. Even when you're in a safe trade, remember, risk management is always there. You want to make sure that you're maximizing the potential of your trade. About 7 minutes left. That was another opportunity right there. Remember, these calculations are based off of a specific algorithm. They're not 100%. Just to show you how elegant the algorithm that drives the market is. For the people that entered here, they know where you entered. And there you go. Just tapped our TP. They know where you entered, and they know where you're going. They know that 1 to 3, 1 to 2, these are the RRs that people look for. That's why they pause the market there, start gesticulating, but we pretty much tapped it there. So you should be out of your position. Even if you set your stop loss or your take profits incorrectly, because you forgot to factor in your broker spread, you can always manually close your position. About 5 minutes left in our stream. We'll continue to watch this. Oil back at that fair value gap, but again, if you were managing your position properly, you should be out of this trade now. That was a 1 to 3. And then again, as soon as you get your, we're not going to count this. It says 88.8. Originally we risked 1 to get to 3, and then we were in a safe trade. And now it's dropping all the way back down, most likely to fill in this inefficiency and tap the 50. Because remember, it took out this liquidity here when it shot up and hit the TP. Aussie New Zealand still driving lower. This is why you want to make sure that you're waiting when you're doing counter trend. We have 3 minutes left. We probably won't look for a trade setup for Aussie New Zealand, but I just wanted to show you. Now again, this was a downside expansion model going counter trend, bouncing off the 238. These are powerful levels. It could bounce off the 50 and continue up, but it's a little late in the game. Oil all the way back at that 50 now. Three minutes left in our stream. Make sure you check us out on fractaleffects.com, where we teach algorithmic trading. We have not actually gone over our dashboard yet, but we have 20 years of aggregate data that shows how this algorithm moves, the algorithm that moves the markets, and how it factors in with our indicator, and it's just extra points of confluence. The indicator alone will get you close to 70% accuracy, and then our goal is to get you to 80% using our dashboard, 80% or higher. Remember, anything lower than 70%, you're gambling. We are high probability traders, and that's what we teach. Please make sure you hit the subscribe button, turn on your notifications so you know when we're live. We are live currently Tuesday, Wednesdays, and Thursdays. So we will see you tomorrow